Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Good morning, Dan.
Morning, Troy. Morning, everybody. Good to be here on a cool day here.
Dan and I, me and you haven't been together in days, but
yes,
on here we've been together in person since then. I want to do a show and tell here, maybe tomorrow when Matt's here, because it feels like we're just showing off if it's just the two of us.
Yeah.
So you got back from Chicago a couple days after I did?
Yeah, a couple days, and it was. If you ever drive, we're driving from Chicago to Knoxville on Sunday, and they had, you see on, always check the weather, wind warnings. And, I'm driving in the car and, it's like, boy, I'm driving worse than normal, right? Going back and I'm trying to blame the wind. Like, hey, part of it's the wind, it's amazing how a wind can really move the car.
Oh, that thing can whip back and forth. I know. It's crazy.
As you're going 60, 70.
Yeah. Listen, I'm in a coffee shop. I was just telling Dan, I did some traveling last night. Went to a place I'd never been called Athens, Alabama. Shout out all you people who are from Alabama. And here's the thing about Alabama. As a Tennessean, I hate Alabama. It's just kind of a thing.
That's how you really feel.
Well, and I'd like to say it's for a good reason. I'd like to say it's like, well, they're, the whole slavery thing, didn't like Alabama and Mississippi really much. But if truth be told, I mean, obviously, yes, the slavery thing was bad.
Yeah.
But the real problem is they've been really good at football for about 2 decades now, 15 years.
2 decades.
Yeah. And I don't like it, never have. So you can imagine my chagrin when I pull into this little town called Athens, Alabama, right outside of Huntsville, and a beautiful downtown.
Oh, is it? No.
Listen, do you remember how, and Dan, this is what I'm going to ask you, because I feel like, you're a different walk in life than I am, a different point in life.
Yeah.
Strangely, you look younger, but whatever. I won't hold that against you. So what, do you remember like the idea of a main street? That you'd have these little downtowns that are vibrant.
Oh, it's so encouraging because you can walk somewhere around. You don't have to get in the car for 20 minutes. Yeah, and there's a few of those like in the Chicago suburbs, or most neighborhoods are walk around. Like where Troy and I were visiting Tom Sosnoff and Scott Sheridan. They live in an area in Chicago called, if you look it up, Ravenswood area. And in the Ravenswood area, right, Trey, you can just leave your house and you walk around. You walk a few blocks and you just, there's a breakfast place. There's a little restaurant. There's a coffee shop. Tom Sosnoff has a coffee place in his building called, what is it? Bad Coffee?
Bad Coffee.
Yeah. And it's actually good coffee. Yeah. And they were very gracious as I did a older man thing. Immediately, she gives me a nice big cup of coffee, and within seconds, I knock it over the counter, and she's so nice, gives me 2 towels, and we clean it up. So that was nice, But yeah, those neighborhoods like that. So you said Athens is kind of.
It's a main street downtown. It had 2 kind of parallel. It was a larger main street downtown from what I've seen. There's places all over America that have main streets. Yeah. So it's just one road. This was a larger one. I mean, obviously Main Street downtowns are Main Street downtowns. They're not huge, but it had a couple different roads. And I walked around and it looked like it was vibrant. I mean, the
Wow.
buildings were like really nice restaurant. I ate at a really nice restaurant and had fish and chips.
Wow.
And it was so my chagrin, I walk around, I'm like, confound it. Even Alabama has really cool spots. Like,
Yeah.
it's just a downer anytime you see Alabama succeeding. You
Yeah.
know, that's the way I look at it.
How many blocks was it? Like 4 blocks to downtown?
Maybe 4 or 5 blocks. So I walked around post dinner and randomly found a cigar shop downtown, which obviously is a huge win for me.
That proves it's a vibrant downtown, right?
100%.
Yeah.
But you know, the thing about it is like free parking. And so I was with a buddy and I asked him, I said, if you could have 100 acres and be 10 minutes from this downtown, or be in downtown Chicago in a really nice loft, what would you do?
No question. No question. The 100 acres in the.
That's what I said. But we had this conversation about it really depends on your point of time in life, I think.
Yes. I think the downtown Chicago is more, young people love it. They come out of school, you get 4 or 5 kids to share an apartment, and you're downtown. It is neat because you can just that, just
electricity to it.
Well, yeah, and you can walk to everything. You got culture, you got the lakefront, you got, I think kids like it. And then when they get married, they move farther out to the suburbs.
That's right. Yeah, that's right.
Yeah.
That's exactly right. Yeah. So I like it. I like those little places. I like, I love trying new things. I love in Chicago trying new restaurants. I also love the idea of just like a downtown where you can just know every restaurant and know everybody in the restaurant.
That's the nice thing about the neighborhood. Like I'm sure in Ravenswood, where Tom Sosnov, you get to know all the different people. One thing, could you give everybody just a quick out of the different things we did in Chicago, your delicacy in the world of pasta?
We'll show pictures tomorrow.
Oh yeah.
And I had squid ink. Dan found the spot, so I was able to have squid ink.
I had no idea they had it, and did Troy find it on the menu? Troy.
Oh yeah. But Dan, you know what? What's crazy is my wife and I's anniversary was Monday. I took her out to a.
Congratulations!
Thank you. Took her out to a spot in Knoxville, and even my dear little city, Knoxville, I ate squid ink Monday night.
You're kidding me?
No, it was awesome, and it was. I'll show you pictures. That one was squiddy. That was inky.
It was good. It was
good, but it was like the one in Chicago. Basically, the sauce was a vodka sauce. It was just a red sauce, but
that looked good. But
the spaghetti, the noodles were like squid ink based, so they were black. This was risotto in Knoxville. Was risotto with just like black ink poured over it.
Wow!
And so it was very, very squid inky.
And it wasn't. Was it Emily's?
No, it wasn't Emily's. There's one called Stella.
Oh, I heard that's a good one too.
Yeah, it's good. It was good. I liked it a little bit more than a Stella. Amelia's is great though. Amelia's is great. Shout out Amelia's and Mark.
Yeah.
Dan, while we were gone in Chicago, there was a lot of stuff happening with stops. And Matt and I talked about it last week. A lot of people getting wrecked on stop losses.
Yeah. Oh yeah.
When you guys like, I was going to ask you, we'll talk more about this, Dan, but from a market maker perspective, when they widen the bid ask out that far, 150, 200 points.
Yeah.
What does that look like in 1993 or 1994? Like when you were on the floor, there's some news event that comes in where you have to widen bid ask real fast.
Yeah.
Walk through the chain, how you do that.
If we knew before the opening, see, usually it wasn't as much like the incident you're talking where during the day you get a big print. Agree? This was more like before the opening, XYZ came out with earnings. It's down $100. There's just going to be a lot of, the brokers are already letting us know there's tons of orders. It's going to be chaos in there. So the referee we call floor official, would come by and say, look at, because the bid ask could be all over the place in the stock and the market makers really can't hedge their option trades, you're going to, for a $2 option, you can widen it out $1. For an $8 option, you could widen it out $3. And that's what they would do. So they're basically saying, if the market makers are going to have a tough time hedging, well, then you got to give them a break here, right? And then the retail, and I'm not sure if the brokers notified the retail traders, so they would know, hey, it could be a little more challenging getting the execution you're expecting. But I think the retail has some responsibility to see if the stock's all over the place, knowing, hey, market makers are going to have a tough time getting a hedge. But what you're mentioning last week is like during the day, there was a 30-point candle, right?
Yeah.
And again, we won't get in a lot of the detail, but with the 30-point candle, the market makers, because it's 30-point and it happened so quick, I don't think the floor officials could get involved that quick.
No, it was all. In fact, what's funny is we were on the floor of SIBO,
right?
I think a couple of days afterwards, and we were asking about it.
Yeah.
And one of the things is I actually think that's a rare case where you might even would want your order to be on the floor during something like that and not on the computer. Because Dan, the thing is, it sounds like what you're saying is, like when you're on the floor, those floor jockeys, the referees, if an option was 15 cents, you can't have a $10 slip spread. They're not going to let you have like $100 bid ask differential on a 15-cent.
No, and that's the thing. I mean, when the smoke clears, you can, I guess an argument could be it was a 30-point candle and you didn't know what the next candle would be. But on the other hand, again, just to hit my history, which was years ago, if I was in the pit and I filled somebody at $6, they were selling, I was buying, I bought it at $6. Many a time a floor official would come and tap me on the shoulder and say, hey, Dan, another exchange was bid 6.25 and you paid $6, give the customer $0.25, right? And if it was 10 contracts, that's $250. But we did that. So to me, it's like I'm torn, right? I'm looking, yes, on a 30-point candle, you could, there's always a what if. All right, you could say, well, the next candle could be this. But when you're talking about if somebody was short a put 200 points out of the money or whatever, and they market at 10, you go to the market maker, if I'm the market maker and I was the beneficiary of that trade, right? 200 points out of the money, and I'm a market maker, and that customer who that credit spread or that short put way out of the money, and they bought it and I sold it at some crazy price. When the smoke clears, it should be, hey, I know I wasn't, what's the word? I wasn't supposed to get that, right? And sure, I could dream up because I got a free $1,000 or $2,000. I could say, well, you never know, anything can happen. But I mean, 200 points out of the money, I would, and I get it. The greed of just people could say, no, I want that. But the bigger issue, and Scott Sheridan touched on that a little bit, is, hey, CBOE or whatever, if you want to say, no, this could be this, and you know what, young man, retail trader, you're stuck with that. Well, they're killing the goose, right? If you're, these are active traders, and if you don't work with them, right, in some capacity, talk to them. Hey, it was bad. Here's where we're coming from. We'll work with you. We'll split it. We'll do something, some working progress. But if by doing it, saying it's on you, I don't think so. Because here's the thing, as Scott said, Troy, if I remember this correctly, if it's a 30-point candle, it still wouldn't be that wide, right? That there should be incremental widening, right? It shouldn't just, it didn't, you can say, well, what if it went 100 wide? Well, it didn't, right? What if the next candle is 100? It wasn't. So how can you make it if you don't know what the next candle is? How can you make it 100, wide? But they should always be willing to come back and say it wasn't, that was too much, right? I could see if they split it or whatever, but that I feel that was too much. Scott Sheridan felt, that not that specific situation, but in general, I just think the CBOE is, in that case, with the information I have, I think it's wrong, right? You don't, just like any business, if you go in, for squidding pasta and they mess it up, sure, they could say, you know what, you said this but you're never going to come back again, right? Screw me around, whereas, I think
straightforward, yeah.
I think of like Connors in Tennessee, they're unique in the customer service. If you even hint that your food isn't perfect, not only will they give you a new plate or whatever, you can take plate home. They'll give you something to go home. I mean, they'll like double compensate you. So that's the trouble I have is, it's very delicate dealing with retail traders. If they lose trust, right? They can do something else. They can go to the ES, correct? They could go to the ES futures options.
There's other
avenues if you're not going to play nice. So, and again, I'm not saying the CBOE did, but I'm saying from a customer service, geez, they could eat, because those market makers basically won a lotto, right? They got money they didn't deserve, right?
Well,
and it could have been a gradual. You can't say based on a 30-point candle, 100 wide or whatever it was. No, it wasn't, and they're down there to take some of the risk, right? They get the benefits of being a market maker in the pit. You can kind of buy wholesale, sell whole, like that. No, I don't. So I'd love to talk to the person, if there is such a person, who made that decision and hear a little more. But anyways, I mean, we need a town meeting, Troy. We need a town meeting.
I think that's the case. I mean, let me ask you this. This is a dumb question, but these are the type of questions I excel in. These are the dumb ones. You have a guy come around, the referee, who's like, hey, give that 25 cents back to the customer.
Yeah.
Let's say you had a hypothetical thing like this that happened, where it's like you got $10,000 a contract, just something nuts, right? And you said to yourself, I'm immediately leaving the floor right now. I'm going home. Like, it's, this is pre-internet, I suppose. What happens when you come in the next day? Because you knew they were going to bust it back then. Let's say, so if you just left, you're like, I'm getting out of here. I'm not going to even give them the chance to bust me.
Yeah.
I'm just leaving.
Well, in that situation, seriously, if in that situation, my recollection of what happened would be, it didn't matter. Dan, you chose, either way, Dan, we busted that trade. But it's nothing I can, but when the floor official comes to me and says that even the next day, hey, because again, nothing changed with me. I know I did that trade. It's just the price is off, right? Or you're saying busting it. No, they would. It was like
they don't care what you do or don't do. They
don't care. They're saying, hey, the fact that you weren't here. Now, one thing I'll say, you just triggered a thought. If I could just for a second,
please.
Interesting. When you're in a busy market, back in the day, but it's pretty similar. It's different. What market makers, say, why would you be a market maker, right? Why be a market? What's the reason, right? Why not be a retail trader? Retail trader, you have choice. Well, a market maker, especially in the old days, it's not there as much. You could buy on the bid and sell on the ask, and there was distance between the bid and the ask. So most people would go home with no position. It'd be scalping, right? And market makers would go from pit to pit. They were like scavengers, and they would just go wherever what did you want? If you wanted to be a scalper, like OEX was the precursor to SPX, in the early days, and Tom mentions this in the interview, you could, the bid ask is this wide. If you're just standing down there, you could buy on the bid and sell on the ask and make, a few hundred or whatever it is per day. But where it got sticky was, okay, I'm in there like a like a lion kills the prey, and there's other animals waiting till he gets tired and will get some of the scraps. Well, in a typical pit, like if you're a market maker in Microsoft or something, if you're just going in for the busiest options, which would be your near-term expiration at the money type calls, eventually you'll get peer pressure from the guys in the pit and said, no. You're not just going to come in here for the scraps. You're going to make market on a 30-day option, a 60-day option, a 90-day option, which they don't want to do, because if you're doing that, now you got some real risk volatility wise. If you're in a 2-day option or 3, you don't have any much volatility risk. I mean, the Vega's very little. It's just price risk. So the crowd will put pressure on you and say, no, we'll cut you out, young man, if you don't trade everything. You trade these goofy leap options that nobody wants to make. You trade these whatever. So the crowd will, and that's what's nice about having, when you and I were there, it's still nice that, yes, there's a lot of electronic trading. Most of the viewers here, their trades go electronic, but you can they still have open outcry, which is what you want, because the person who showed us the trading floor, he was actually there when I was there. He's getting older now. He mentioned, didn't he, that when the market goes crazy, he mentioned some instances that it went crazy recently. You get better markets when there's actually open outcry, because they don't care. I mean, they're used to a little pandemonium. But if there wasn't any open outcry, then things can get looser. So you want open outcry as a retail trader.
Well, and my guess in that instance is you're probably on an open outcry not going to get some guy down there. They're asking for a quote on a strike 150 points away. Yeah. They're probably not going to quote $100 for that strike.
No, and that's a good point. If it's open outcry, even in that situation, cooler heads will prevail. Guys will say, hey, maybe I'm short deltas or I'm long deltas. And you're talking like big firms, like there were 4 Citadel, when we were down there were 4 Citadel market makers, and there's no size limits. These guys can trade, they'll trade 1,000, 2,000 in SPX. So I think it's, with the open outcry, I don't think that would have happened, right? With the open outcry, I can't guarantee you, but with those big firms and they're hedging all over the place, I don't think it'd be 100 wide. I think that was just an online burst.
It's a software thing. I mean, it's a function. It's a function of them trying to hedge risk in real time. That's the blip of it. I mean, I'm not defending it at all. I'm just saying I understand from a technological standpoint why it happens. You have a 30-point candle, they have sizing mechanisms for something to that magnitude, that the next tick bid ask are going to widen at this distribution.
Yeah.
And it's as simple as that in my mind. And so, and what I have a feeling what happened was this actually kind of like you can reverse engineer this a little bit. I think some of their functions of how they hedge is based on the day's action. Because why did it go 150 points down? Because that was our range for the morning. We had been down 100 points.
Okay, so they use that. Okay.
So that distribution for the day, it's like they've also included what we've actually been at.
That's a great point.
And so they just widened everything that we've been at.
Well, because it benefited them.
That's exactly right. So right. I wonder, like, I don't know this, but the people who got really hurt, like 100, what I've heard is like 150, 100 points away. I wonder at like 175 or 200, something outside where we had been, if it got that type of bid ask going for it.
That's interesting. But yeah, that's a great point. But again, could they have slowed that algo or whatever? Could they have slowed it? You're saying instead of going all the way, pull the rubber band, why not more gradual? But again, I go to the thing, okay, even when the smoke is done, even the market makers, let's say on the other side of those trades for the customers, let's say on the other side of the trade was Citadel or some of these firms. They're, it's counterproductive because it's like, this is the food that you need, right? This is the food that you need every day. The people that are going to come in that you can trade the opposite side of. What's the purpose? And I just think that, They can
Well, and it
still
was
correct it. They can still go in and say, it's not too late. They can
well,
go and
'cause you
say,
think-
we looked
100%.
into it, guys. Here's what, we did make a mistake, but we want you back. We want you to do this. Here's some change. Two things. One, help them out financially. Number two, but they need to know that the next time this happens, we're going to slow it down. Is that the right way to say it, Troy? We're not going to pretend that it's the end of the world or that we have to widen it out to the range for the day, right? That's a little cart before the horse, but you still have to look at, these are people have put, what would you say, 100, 200 points out of the money?
I think so.
Yeah, that would scar me, right? That would scar me.
I really think it probably dropped some people out of the market because you can't back test. I mean, you really can't back test with confidence if every X, let's say every 300 iterations, let's say every 500 iterations,
Right.
700, whatever, you're going to have a catastrophic fill on a stop loss. Like
right.
it,
And we're not just talking one contract. Some people might have 10 or 100 on. And so I think they have to, they have to fix this. And I think that's what Scott basically alluded to. And we'll try to get him.
We'll talk about that. But like SPY, to Steven's point, SPY in a million years would never do that. But here's why: it's listed in multiple exchanges. Like
that's a good point.
So cooler heads are going to prevail because there's just more competition.
I guarantee if there's 3-4 exchanges going on there, someone's going to come in and say, no. Well, in other words, someone would have sold it way before that, right? Instead of getting it at 10. So anyways, it's, I'm hoping I still think they can make the right decision. They still can fix this, right?
Yeah.
Anyway.
I know. Well, listen, what I didn't tell you about the story of Alabama is that I got back into Knoxville at 3:30 this morning.
Yeah.
So I'm going to probably cut it off a little bit short today because I want to make sure that I didn't accidentally put stop markets on things overnight. I'll tell you what I put a stop market on a spread or like DC or something like that. I just want to make sure I didn't do that in my sleep last night.
Yeah.
Tomorrow we're going to we have some more. You guys were awesome in the show, the show discussion, and with some really good tests to look at, and we'll model some out this week. Dan, we looked at yesterday the idea of saying, what would it look like to run some 0-day stuff without stops, and how would you set that up?
Okay.
Yeah.
Wow.
For those who are really scared of stops at this point, and if you're not scared of stops, and we're not trying to be boogeyman, so if you want to do stops, do stops. That's not my business.
Yeah.
I do know that there are some people that were shook from this, and so we want to try to give you some alternatives, at least to try to think through from a theory standpoint.
Well, and I'm looking at this optimistically and saying this is an opportunity for not just the exchange, but for traders in general to say, okay, this happened, whether they fix it or not. Okay, what are some other things that, we can do? If someone's selling a bunch of 0-day options, can they go 2 or 3 days out and buy a few strangles for every 10 short strangles, a 0-day? Can you buy a bunch of strangles? Like, who's the gentleman? Mark does.
Mark
right?
Anderson,
in his fund. So there's things you can do, but you hope out of this comes, what are some positive changes to not just help the people who were unfortunate to be the other end of it? What are some better ways to do it? And maybe it'll even change the way stop orders work at some of the brokerage firms. In other words, a stop order becomes a market order, but maybe they can see, okay, if the market goes too wide, either I don't do it or it goes to a broker, right? Because if that electronic, if those orders are, let's say if I'm doing a stop order and it gets this wide, right? Maybe it'll stop it. No, we won't fill it if it's this. It goes to the broker in the pit. That way, if the broker gets it, now at least you're getting a shot at sanity. right?
Yeah,
And the broker
that's right.
suddenly gets all these orders in and saying, so somewhere to turn off that stop loss, because, as long as it's okay, if it's, this wide or whatever, that's great. But if it starts getting this big, shut down the stop order, hand the orders to the stinking broker, let him call out and have all these participants bid on this, right?
You're saying turn off the machines more than one.
Turn off the machines. If I'm going in with a stop loss market order and immediately the machine that's going to fill me goes wider than a certain limit, it won't fill it. It'll stop it. Warning, Will Robinson will go off. It'll go to the broker and he'll getting it with a warning on it saying, hey, it was too wide. He'll call it out to the market makers. And I guarantee you wouldn't get $10 or $12 when you call out to a participant. So something's got to stop this thing, that if it goes too wide, because you're thinking, right? If you're a retail trader, if you're going in with a market stop or stop market order, you're not. If I asked somebody and said, if it was suddenly went from this wide to this wide, do you want to go still? And they'd say no, right? But
That's right.
They'd say yes if there was no alternative. But the alternative should be there's a real person standing there, and we've seen them, right?
Yeah.
That they're representing, that they can represent you.
Now the problem is if you try to do that if you tried to do that, oh boy, here comes trouble. Here comes trouble.
Good morning.
You say Stopageddon 3 times and he appears.
It's like Beetlejuice.
I was just about to say the problem is on the floor because it's about 20% of SPX volumes on the floor, which is much more than I thought it would be.
Yeah. Honestly. That's a lot. It's more than I thought it was too.
Yeah.
But it's basically all institutional flow.
Yeah.
Because he said basically they will joke to themselves, the market makers on the floor, and be like, hey guys, I want to make a market on a 50 lot. And they're like,
right.
Like basically anything under 50 is just
right. Conversely, when JPM is rolling their collar, they're not doing it on E-Trade.
That's correct.
No offense to E-Trade.
Maybe they are. That would actually be a wild day to get to go to the SIBO floor. Is during the JPM collar roll. Dan, I don't know if you know that. Like every month, is it a month or a quarter?
Yeah, I think it's a monthly roll.
Can't remember. Like basically, JP Morgan rolls this giant collar that's just like the whole market, basically
quarterly,
and they do it quarterly. But it's something insane, like 40 million contracts or something crazy.
Wow.
I would love to be on the floor a day when.
Well, but I bet you. No, I don't know. I mean, this is the first time I didn't know that. I mean, to be honest, but I would say if you knew when we were in a stock and you knew something like this was coming every month. Like I remember there was a similar collar. I was in the Conseco pit, CNC at the time. I didn't even know Conseco still trades, but
how's that?
But they would come in on a smaller basis, let's say 10,000 contracts, but for 4 small market makers there that had to take the other side. But here's the thing. It was well orchestrated. The specialist in the pit was, guys, this is Tuesday. You know what happens Tuesday? It's like Taco Tuesday or whatever. Tuesday, the guy's coming in, and you'd even know when he's coming in. It'd be like 11 o'clock. So it was more orderly. So basically what the specialist in the pit would say is, let me make the market on this. Kind of. Don't get in the way. In other words, it's the fact that you're going to, because he's not doing 10, right? He's doing 10,000. So we need to give him a fair market on 10,000. So it's going to be a little wider. So they're making a little bit of money. The market makers, they're getting a decent deal, right? But they're basically saying, stay out, right? Don't let us price this thing.
Let the big dog eat.
Let the big dogs price it. Yeah. But can't you, Troy? One last question, Troy and Matt. Can you at Schwab or Tasty, let's say you're doing 10 contracts or more. Can you designate that goes to a broker? Is that
we don't. I don't think we have time to cover.
no, probably not.
this in
We're
the
already
last
at
couple
9:20.
minutes.
I'm getting pumped up for this topic, but we'll
The
have
short
to-
answer. The short answer is yes.
And
The
no.
actual answer is probably not. And it's confusing, but I've heard a bunch of different
All right.
things. So.
See, this could be good. Could come out of. I'm looking for positive
Yeah.
that we can hopefully maybe do some change, and we'll work up Scott Sheridan. We'll try to get him in here, and we'll try to get things.
I love it. And listen, Matt, I mean, the world wants to know, did you get the Costco gig?
I got the Costco hot dog
Oh, man.
Wow.
They give you a hot dog.
with
Dan,
a
Matt-
fountain soda.
Matt showed up to the show yesterday in a suit.
Wow.
Yeah.
It was just a sport jacket. It's the only one I own. Not
The
that
chat-
exciting, guys.
The chat was trying to figure out, is it Costco? Where's he applied? What's he
What do you get? You get the hot dog, a drink. Do you get a chip with that?
No, but it's $1.50 hot dog and drink. And Troy's right. They sold so many hot dogs. They opened multiple hot dog factories just for themselves.
Wow. And it's an all beef hot dog. It's not.
And it's a really fancy bun, which I throw away, which is bad.
I hate
They
the
won't-
potato, but the potato bun is.
It's a
delicious.
fancy
It's-
bun, but
Yeah.
I just do mustard, relish, and the dog, and I dip it in the bag and eat it with my
You,
Diet
you
Coke.
probably look like an absolute fiend.
I look like a monster.
Yeah, that's a monster. Nerd. I mean, just dude at Costco with just no bun.
What
just
is he
eating
doing?
that.
Family cereal.
Relish.
Yeah.
Sometimes I get the onion. They'll give you a little onion. If they have the onions out in a
Parents
I'll
shielding
dump it,
their
and
eyes.
I'll just make a pile of mustard, relish, onions.
That's
Very
That's
aggressive. Very aggressively.
that's unbelievable. I listen. Speaking of unbelievable, we're gonna do some fun stuff tomorrow. And guys,
Okay.
we have I haven't told you guys. This is the state of our affairs right now because we're all traveling. We have a special guest Friday.
I didn't even know
Wow.
that.
I didn't.
Yeah. So I'll let you guys know about that here pretty soon. So
Looking forward
they'll
to it.
find out, and then everybody else. Will
You
find
got
out maybe tomorrow.
J-Pow?
J Paul.
They're gonna do the JPM caller live on
Okay.
We're gonna do the
Sure.
caller live on the Odo
do
show.
the caller live. So, all right, guys, have a great trading day. Oh, listen, and remind me tomorrow. This has been. I told Matt. I told them I got in at 3:30 last night, so my brain's fried. But did gold drop like 11% yesterday?
Yeah, or not 6.5% maybe.
6.5.
Let me see
$20
what.
I
So
just saw that
when
it was down like hundreds of dollars.
when people say gold, so
GC.
GLD.
okay,
I was
because
oh, yeah,
I
GLD.
just use the CFD on TradingView instead of an ETF or whatever. But yeah, it's wow. I gotta expand my chart. So at Monday afternoon around close, it was at again the CFD was almost at 4,300, and right now we're at 4,060. Sorry,
Crazy.
almost 4,400. Sorry.
Yeah,
4,400
that's
to
what I'm saying. It was almost a
4,660.
$400 drop.
Yep.
Oh, wow.
Also, Tom, great point. I am waiting for a hedge fund. I'm going to start a hedge fund that all we do every day is we harvest premium. But but how we harvest premium is we sell 100 points out of the money and we set stop limits for $100 on that. And we buy a bunch of 15-cent puts, so we're long gamma, and then we just put a bunch of, and we only need to get filled on that put about twice a year for it to be a
That's
profitable
a-
strategy.
That's
Beat the system. Beat the system.
oh
So, listen, if you want to reach out, let me know. This is the life we're living over here.
oh my
Just,
goodness, that looks
Tommy
like a
Bahama.
Hard Rock Cafe shirt.
Tommy
Yeah, it
Bahamas.
does. It does.
Is
this
it?
is how you know this is 100% a cruise tourist T-shirt. Is that it's Nassau and they just did it in the style of Hard Rock Cafe.
Yeah.
That's 100%. Just you get off the boat and you're like, I gotta buy something from Nassau, and they're like, here's this Nassau shirt. You like Hard Rock? And you're like, I do. And they're like, have a good trip home.
$20. See you later. Yeah.
That's right.